Right, so I'm ready to go. So I'll start recording now and it'll be live. Okay, afternoon everybody and welcome to the Pension Fund Committee. The first item on the agenda is the election of chair for 2022-23. Could I have nominations, please?
Yeah, I'd like to nominate Councillor Mike Lewis as chair.
Can I have a seconder?
I'd like to second that.
Any other nominations? Okay, all in favour?
Aye.
Thank you very much. Councillor Lewis.
I'd just like to say that before we move on to item 2 on the agenda, I'd like to thank the members of the committee for their support and confidence they've shown in electing me as chair of the LGPS. Now on to item 2, and as my first duty in chair, I would like to call for nominations for the position of vice chair.
I'd like to nominate Phil Downing, please, Chair.
Can I have a seconder for that?
Happy to second that, Chair.
Thank you. Oh, sorry. Could we have a vote on that, please? Sorry. Thank you very much. Congratulations, Phil. Thank you. Now on to item 3 on the agenda, which is apologies for absence.
Just apology from Nick Gillema. Okay.
Thank you. Now we move on to item 4, which is the minutes of our previous meeting. I'd like to call on those members who were at that meeting to.
Chair,
Oh, sorry, I do a declaration. Yes, I missed that one. Sorry. Yeah, declarations of interest. Have we got any? I myself am a member of the pension fund.
I'm also a member of the Pension Fund, Chair. John Curtis.
Pension fund as well.
Yeah, my brother is a member of the pension fund, Chair.
Yeah, Councillor Will Thomas, member of the fund.
Okay.
Officers as well.
Officers.
Member of the pension fund, Chairman.
Member of the pension fund.
Thank you.
Yeah,
Thank
and
you.
myself, chair, member of the pension fund.
Yeah. Sorry
Myself, Jeremy. Sorry, I'm online today from legal. I'm a member of the pension fund as well.
Thank you, Steph. Right. Yes, sorry, I skipped that item, but I missed it on the agenda. Right. Now we move on to item 4, which is the minutes of the previous meeting. And as I said previously, I would call upon those members who were at that meeting to confirm that they're true and accurate account of that meeting.
Yeah, I move, Chair.
Thank you. Seconder. Thank you very much. Cheers. Right, we got first go to page 1. Page 2. Page 3. Page 4. Page 5 and page 6. Okay. And everyone's happy with those? Thank you. We now move on to item 6A, which is a report from Audit Wales, and this will be taken by Dan King and Gillian Gillette.
Chairman, Gillian and Gillian and Dan are online. Well, I think in actual fact it's just Gillian today.
Just Gillian, is it? Okay, thank you. Yes, this report is for information only, but over to you, Gillian. Thank you.
Thank you, Chair. Yes, just quite right. It's just me today. Dan's got a funeral, so couldn't attend. So Item 6 then, as you just said, is our audit plan for 2021-22 audit of accounts. So it just sets out the work we plan to do to discharge our statutory responsibilities and informs you when it will be undertaken, how much it will cost and who will undertake the work. So our responsibilities in respect to the pension fund are to give an opinion on the truth and fairness of your financial statements. And our audit approach is based upon our assessment of the risks of material misstatement. Also, in undertaking our work, we adopt a concept of materiality, i.e. the statements that might result in the reader of the accounts being misled. The planning stage of the audit, we've identified 2 risks, which are summarised in Exhibit 1 on page 10 of your pack, together with the work we plan to do to address these risks. First one is a management override of control. This is viewed as a significant risk in all audit bodies in accordance with auditing standards, in particular International Statement Standard of Auditing 240. And also we've identified private equity investments as a risk. So as there is no quoted market process to value these investments, there's a greater risk for the reasonableness of the valuation of investments. If we move on to Exhibit 2 on page 12 of your pack, that just sets out the fee for the audit, which is 44,125, and that does reflect a 3.3% increase over your 2021 fee. Our general fees have increased by 3.7% this year as a result of increasing cost pressures, and that's been set out in our 22-23 fee scheme. And Exhibit 3 on page 13 just sets out the main members of the audit team. And Exhibit 4 on page 14 sets out the timetable for undertaking the audit. We aim then to complete the audit by the end of November in line with the statutory deadlines. If anyone's got any questions, I'm happy to take them.
No questions? Thank you, Gillian.
Thank you, Chair.
That report was just for information only. We now move on to 7A, which are reports of the Section 151 officer, Jeff. City and County A, which refers to the City and County Pension Fund draft annual report and statement of accounts for 21-22. This report is for recommendation. So I'll over to you, Jeff, and you can carry on. Thank you.
Thank you, Chairman. This report follows on really from the previous report in that this is the actual statement on which Audit Wales will undertake their statutory audit later this year. So the basis of their audit, as they've just previously outlined, will focus on largely this document in front of you from page 17 onwards to page 273. You'll be glad to know I'm not intending to go through it on a page by page basis. But as you noted, just with the sheer volume of that document and recognised earlier on in the pre-meeting chat of what a huge piece of work it is to produce that document. And first of all, I'd like to place on record my thanks to my colleague Karen Cobb and her team that she has working for her, and Claire Elliott and Nick Jenkins and their respective teams, who between them contribute to the formulation of the draft annual report and the statement of accounts. As I say, it's a statutory requirement that we do produce these financial statements for the pension fund, and in this particular year, it's particularly important because obviously the balance sheet date at the 31st of March 2022 forms the basis of the forthcoming triennial evaluation. So every 3 years, as committee members are aware, the appointed actuary undertakes a full triennial evaluation, and that's based on the asset values at that particular time and the financial health of the pension fund at that particular time. So these financial statements that you've got before you are particularly important in that they will form the basis of the actuary's assumptions and starting point for his asset valuations and asset statement moving forward for his valuation that you will receive certification of in March 2023. So moving to the main body of the report, if I could ask you to turn to page 22, where we have a quick 3-page summary of a 3-year summary, sorry, of some key metrics of the pension fund. We can see there at the bottom of page 22 in the right-hand column, as at the end of 21-22, we can see the net asset values at 31st of March standing at a very healthy £2.9 billion. As you can see over that 3-year cycle from 2019-20 to 2021-22, which coincidentally coincides with a period of incredible volatility and probably bookended by 2 seismic events. The start of the COVID pandemic in March 2020, and then running on to the back end of 21-22 when these financial statements are compiled at the 31st of March 21-22. We're right in the midst of the Ukraine crisis. And as you can see throughout that period, that 3-year period on page 22, we can see that the assets of the pension fund have increased in value by up to £1 billion through that three-year period. So that is quite staggering in terms of counterintuitively throughout that period. You may have expected some contraction in asset values. None of it. The fund has remained in robust health, and there have been mitigating measures put in place that we have presented to the committee previously. Hence, the good position that the fund finds itself at the 31st of March 2022 going into that valuation cycle. Obviously, massive headwinds ahead of us. Inflation running into double digits. The only manageable way that the Bank of England seems to have at its disposal to manage inflation is interest rates, and rising interest rates in any material way threatens to stall the economy. So policymakers have to tread a fine line with how they manage inflation and how they manage those increases in interest rates. So those are the headline summaries in respect of the fund, and in terms of the relative performance of the City and County of Swansea Pension Fund relative to its peers. In the last 12 months, we've just had the local authority Universe statistics back from our performance measurers who measure the performance of the 89 pension funds up and down the country. Because as previously indicated, there are 89 administering authorities like the City and County of Swansea Pension Fund who manage pension funds on behalf of their members. And amongst that cohort of 89 funds, in the last year, in terms of investment return, we ranked joint 12th. But in this 3-year cycle that we're talking about on page 22, as I say, during that period of quite high volatility, the fund ranks second out of 89 in terms of investment return. And considering that we're a smaller than average sized fund, that gives you some indication of punching far above our weight in terms of maximising economies of scale, utilising new products, new techniques to mitigate that downside risk. So that gives some degree of the trend and direction of travel that the fund is going in, and hopefully some of those measures that the committee have put in place will see us in good stead in the headwinds that we face. It would be a disservice to the rest of the report if I didn't draw your attention to some of the items in the report, and on this, obviously this committee is historically and perhaps quite rightly, as some commenters say, unjustly concentrating on investment risk and investment matters, but the reason we're here is to pay our members' benefits, and a great deal of this report is in relation to how our admin department performs and some performance metrics in respect of them. So from page 24 onwards in the report outlines some key performance indicators in respect of how we deal with our members, how the admin function has performed, and in terms of how well we perform in respect of our dealings with employers and members. We can see on page 30 and page 31 some results from questionnaires that we've undertaken and surveys that we've undertaken with our service users. And although not, wholehearted contentment and happiness with the service they receive, you can see that primarily well over 90% satisfaction rating from both our employers and slightly less so with our membership, because undoubtedly when dealing with individual member cases and individual circumstances, there will be instances where we don't get it right, and we admit to that and we own up to that, but we try and address it and make sure that we put in place improvements going forward. And there are some of the comments made from some of our satisfied customers. Again, with increasing scrutiny and focus on the workings of the pension, we're under regulation by the pensions regulator, and when instances where members do not get satisfaction from us as an admin authority, they are at liberty to escalate their complaints to the pension ombudsman. And you can see on page 32 a number of cases which have been presented during the year and which are still ongoing there, identified on page 32. So 6 during the last 12 months. On the following pages, number of legislative changes, updating readers on the legislative changes. It's got a regulation and legislation heavy area, and they're always updating regulations and guidance around those regulations, and they appear on those pages that follow. On page 41, we have a summary of the Wales Pension Partnership. As you know, Swansea is an integral part of the Wales Pension Partnership, where we form a 1/8 of that partnership alongside the other Welsh pension funds, and the pages following from 41 onwards gives a snapshot of progress to date in respect of the work undertaken in the last 12 months and the assets under management across the pool as it stands. And on page 26 you can see the total investments across all 8 pension funds. On page 45 of your pack, currently stands at £23 billion. So in terms of progress and percentage of assets pooled compared to the other national pools, that is quite a healthy number. We probably stand at or near the top of the table in terms of percentage of assets under management by the pool. It's still a work in progress, as you're aware. Work is still ongoing in respect of the private market assets and some of the other enlisted assets such as property, which have yet to be pooled. However, the progress is very satisfying to date. And then we move on to, on page 57 of your pack, the annual governance statement. Obviously, Swansea Council is the administering authority of the pension fund, and we're governed by the governance procedures and processes that Swansea Council have in place. And the annual governance statement there references those governance arrangements which are in place at the administering authority. And then the main body whereby facts and figures, numbers, etc. start, as you know, a lay person would appreciate, as financial statements as such, start on actually page 101 of your report pack, and there's a statement of accounts. And there you can see again a quick summary of where the money comes from and where it actually goes in terms of paying our pensioners, between pensions and lump sums. We paid approximately 90 million last year. And as you can see there, which is an important characteristic of the fund, in that we are still cash flow positive. So you can see on that line where it says net additions from dealing with members, we are still cash positive to the tune of £4 million a year, so that we do not yet have to disinvest or use investments to pay our pensioners as yet. However, as we are a maturing scheme, as is the LGPS in its totality, there will come a time when we are not cash flow positive any longer, and we will have to retain more liquid assets to meet our monthly pension payments. Members are always interested in seeing on page 111 the list of our employers that we have in the scheme. As you're aware, we're still an open scheme. We still admit new members and still admit new employers if they satisfy the appropriate characteristics and criteria required for membership of the LGPS. And there you can see the full list of both admitted and scheduled bodies within the scheme, and the contributions in respect, the benefits paid in respect of those employers. Committee members are also always usually very cognizant and interested in the expenses and the costs of the scheme, and they're outlined on page 112 and 113 of your pack. And you can see there on the bottom of page 112, we have the summary of our admin expenses and the oversight and governance expenses, and obviously on the top of page 113 is where the majority of our costs are incurred, and that's in the investment management expenses in actively managing and dealing with that £3 billion worth of investment assets. And as you can see there, as you'll all be aware, costs do rise, and counterintuitively, that's a good thing, because generally management costs are a function of assets under management. So as those asset values increase, so the management costs associated with those assets increase. So counterintuitively, management costs increasing is a good thing in the main. What anomalous increase in costs, which isn't as a result of increase in asset values, is the transaction cost. And as you can see there, the top of page 113, and there's a slight presentational issue there. If you could visually just shift all the figures down one row, in that 4887 relates to management fees and 5197 relates to performance fees. It's a hanging indent presentational issue there on the top of page 113. Obviously, before it goes to print and final version, these presentational issues will be ironed out. But as you can see there, the transaction costs of 1631 last year have increased this year to 3064. And those additional transaction costs have been incurred as a result of the approved investments into our unlisted funds in community housing and private debt, and some additional costs arising from movement in our WPP global equities portfolios. So that, hence the increase in transaction costs from 1631 last year to 3064 this year. And then the rest of the document, Chairman, outlines and includes the statutory required policies and additional information that we're required to include in the annual report as required. Again, there are a couple of graphs at the back that I always like to show you, which visually communicate what I'm telling you, and that is on page 164. You can see the very nice graph which gradually shows an increase in asset values as we move to the right. And then on page 168, you can see the quite healthy, outperformance that the Swansea pension fund has enjoyed relative to its peers. So we're the dark column there on page 168, and the lighter column next to it in each instance and each year is the local authority average. So it's been volatile, but of late, we've quite comfortably outperformed our local authority peers, and hopefully that'll continue going forward. Chairman, I'm happy to hand it over to you for any questions, and then politely ask that you could move the recommendation at the end of any questions that you may have, Chairman.
Thank you, Jeff. There are a couple of things I'd like to, first of all, like to say I'm extremely impressed by the rise in asset values that you touched on. And I'd like you, please, if you could expand on our ESG investments and the benefits this move has brought to the fund, and our ongoing journey to net zero, basically, for our investment portfolio. I wonder if you could expand on that before I ask the committee for their vote.
Chairman, that's an excellent question, and probably a failing of the annual report, probably in that it perhaps doesn't communicate the progress made to date in that regard, because obviously it's largely around the finances and the numbers around the assets. However, the way we've deployed those assets and the way that we've responsibly invested, isn't contained therein. As you're aware, the committee approved its net zero ambitions in November of last year. However, even prior to declaring those net zero ambitions, the fund had already undertaken, and it was one of the first funds in the country to adopt its ESG policy and to formally agree a responsible investment policy, and set at that time a very ambitious carbon reduction program of up to 50% by 2022, and we're talking about carbon dioxide and carbon emissions in totality, not just those in relation to fossil fuels, which many lobbying groups and interested parties seem to focus on. However, if we are as a pension fund, as a society, to achieve net zero, it needs to be across the board, not just in our fossil fuel investments. So following on the decision that the committee took in November 21 to adopt a net zero target, we've been formulating our plans and objectives for committee to discuss and consider with how to take this forward. But ahead of that, we've also, the committee have also recently approved and implemented a series of investments which contribute to the energy transition and help and assist society in the energy transition, in that it's made material and sizable commitments to renewable power infrastructure investments in its private market portfolios, and also very recently, just recently, the committee has made a commitment to its first timberland and forestry and agriculture investment, whereby, obviously that will benefit us in terms of decarbonising the portfolio. We recognise we've got some ways to go, and hence the committee have agreed and approved the work to take us to the next level, and to ensure that we can, with some degree of certainty, achieve that net zero target by 2037. It's not a given. There's a lot of uncertainty about achieving net zero, even whether it can be done. But this measured incremental approach, I think, that we've taken to date, whereby the committee makes a policy decision, implements, measures the efficacy of those policy decisions, then reviews, and then moves again, I think is a very is a very good way to make those decisions, and it's a good way to tackle the issue, and it's clearly demonstrated by not having an adverse impact on investment performance, as evidenced in the last 3 years. So hopefully later on in the agenda you'll have a chance to share your views on both the objectives of that journey and some of the timeline issues that perhaps lobby groups and interested parties have something to say on in terms of pace and scale. However, we think the incremental approach whereby we take it slowly is the prudent way to take it forward, Chairman.
Thank you for that, Jeff. I only asked because to give some of the new members of the committee a flavour of what the fund has been doing for the last 5 years. Before I throw it open to the floor, I have one, Andre, our representative from Hymans is online, and he'd like to say something. So,
thank you, Chair. Yes, I think Jeff covered and responded very well, and also I don't want to preempt, given this topic will be covered later in the meeting. I just wanted to perhaps add my voice as well and say that a lot of work has been done to date in regards to responsible investment and net zero, and quite a bit of the focus to date and a lot of the good work has been reducing the carbon footprint of the fund's equity mandates. So that's the bulk of the assets are held in equity, and at the moment we're doing some work following the decision at the tail end of last year to state a formal net zero objective by 2037 to expand this and look at all of the asset classes. And as Jeff says, progress has already been made in allocating to asset classes such as timberland and renewable infrastructure, and we'll continue working on this and provide a bit of an update later in the meeting.
Thank you, Andre. Yes, any other members of the committee like to speak? Will first, please.
Thank you, Chairman. Firstly, I'd just like to congratulate Jeff and his team on another incredible performance. I understate this when I say how lucky we are to have such great performance. To have the second most successful fund over the last 3 years is really impressive. So well done, and everyone in Swansea Pension Fund owes everyone a huge debt there. So not only that, obviously the decarbonisation work your team's been doing and the equity protection stuff, is cutting edge. So well done. Just a couple of questions. 3 questions. I don't know if you want to jot them down. I'll ask them all at once. The first was the housing commitment that we've made there, the 30 million. I'm wondering if that's all local, because I know we were looking at investing in local housing. Third was the custody fees. I can't remember what page that was on when we were looking at the fees. I was wondering what custody fees related to, because it's separate to some management fees that you touched on. And one of the other things you said, obviously we're 4 million net positive at the moment, but once that does go the other way, as demographics and the sort of smaller council feeds through, you mentioned that you might have to sell cash flow positive assets, but surely over the longer term, I'm guessing that would come across the whole average. But I'm just wondering, because if you're just selling the sort of, you know, your bonds, your more liquid assets, then obviously that that part of the portfolio is decreasing then compared to other stuff. So just wondering if that was the case, really. Thanks, Chair.
Would you like to answer that question first? Now I'll go on to Phil.
Thanks, Chairman. First question. Oh, well, if I take the last question first, in terms of cash flow management, Councillor Thomas, a lot of our investments currently, and as committee previously approved, throw off cash as a function of their return, such as property in the terms of rent, bonds in the form of interest, coupon, infrastructure, in respect of the service charges that come off. So there are lots of asset classes within the portfolio that already generate a lot of cash and a lot of income. At the moment, the default for the fund at the moment is to reinvest that where possible. However, going forward, when the fund does become cash flow negative and we do have a use for that income generated, we will take that income in from those assets instead of automatically. So when I say disinvest, it was probably a misnomer on my part, in that we will use the income generated to pay benefits rather than to automatically reinvest as we do at the moment. At the moment, everything is recycled automatically, but going forward, we'll definitely have a use for that income generated. And as the committee approved a number of cycles ago, we are increasing our portfolio of yielding assets by reducing our equity portfolio and investing into asset classes like property, like infrastructure, like private debt, which, as a natural function of those asset classes, generates a lot of income. As I say, at the moment, we automatically reinvest it, but in future, if we need it to pay benefits, we'll hang on to it. Custody fees. Custody fees are incurred as a result of having to physically hold assets in funds that we invest in, for the safekeeping of those assets and to ensure probity and in line with financial rules, etc. Those stock certificates and stock holdings and stock titles are held by a custody bank on our behalf. You know, historically, if you're a private investor, you'd have ownership of those stock certifications yourself. However, due to the sheer size and volume and frequency of those transactions, that would be unfeasible. So we're legally obliged to engage a custody bank, and they traditionally charge a fee for that. Obviously, the custodian arrangements are in the main via WPP, and it's via that custodian bank relationship that we incur those costs. However, some assets do sit without the WPP arrangements, and some of those custody fees are incurred as a result of that. I forget your first question now, Councillor Thomas. Local housing. The primary driver for investing in local housing was, again, the search for yield, the fact that it was a good asset class to generate yield, but also the potential social impact that the positive social impact that investing in housing could have. And in line with all the investments that we undertake across the fund, we've always adopted a diversified approach, i.e., not concentrating risk in terms of geography or jurisdiction or sector in that way. So housing is a diversifier for us in that regard. And then as a subcategory, as a sub-diversifying factor within housing, it would be inappropriate to concentrate all that housing risk, for example, in the Swansea area, because we would be exposed to, for example, a lot of South West Wales housing risk in that regard. So it's always been the approach to adopt a diversified approach, and so the housing fund had a mandate to invest throughout the UK. However, it was with the explicit agreement with the fund managers that we engaged that they would undertake best endeavours to deploy some of that capital within South West Wales. And as Councillor Thomas is aware, there is an ongoing scheme which is subject to due diligence at the moment within this area that is currently in the region of 40 units within the boundary of the City and County of Swansea Pension Fund. And also there's another scheme which again is very early stages of 80 units, which is again within the county boundary of the City and County of Swansea Pension Fund. But it's always been an approach whereby we want to diversify the risk and have those housing investments spread throughout the full geography of the UK if we can.
Phil?
For a minute, and I thought you'd read our LGP. Yeah, on the statement of accounts, like I said, this is the first page. I go to it just to make sure that the left-hand side is greater than the right-hand side, and then you start with a smile on your face, and then you start reading the rest. I think I got the right page. I was going to ask what percentage of our funds are now in the pool, but I think I got the right page, and it's 80, just over 80%. The first question is, where are we in the league table of the 8 funds in the pool? You know, is 80%? Have we invested the most? And where are we there? And the other one is, of the 20% remaining, have we any plans in the next year or two to put any more of our investment into the pool? And I won't ask now what, because we'll discuss that if we are going to do it this year or even next year. No, I won't ask the next one. Yes, I will. It's a cheeky one. Like, have you done a study of where would we be on management fees if there wasn't a Welsh pool? So you haven't done that then. Sorry.
No. They're all great questions, Councillor Downing. In terms of the percentage of assets that constituent funds have committed to the pool, this I'll have to confirm with a written answer to you to formally confirm this, but my understanding is that Swansea at 80% is the fund which has the most pooled assets within WPP. So of the 8 funds in Wales, we've pooled the most, I think, at this point in time. And as a pool, we've committed over 70% of our assets between the 8 of us to the pool, and that I'm pretty sure stands head and shoulders above the other 7 pools in the LGPS. Some of them are sort of less than 10% pooled at the moment. So in that regard, I think Wales stands very proud in terms of its progress in the pooling agenda. Sorry, Councillor Downing. And the second question was in relation to.
Are we envisaging doing any other investment from the 20% remaining? And one thing, when you said about the Welsh pool, do you know, when we go away and we meet other people from other areas, they are quite jealous of the Welsh pool, to be quite honest, on the way that we've done everything swiftly. I know that the last chairman done a lot of work with regards to this, and yeah, you know, we talked to people from like London and places like that, and they are. And we didn't think it would, because in the beginning, we were too small a fund to have a pool, because I think 25 billion was the lowest, but then we were accepted, and it's worked well for Wales, to be honest.
You're quite right, Councillor Downing. I mean, we took the pragmatic decision to keep it simple, to harness and arrange the collaborative arrangements which were already in place. The 8 Welsh pension funds prior to the pooling agenda worked very closely together, already met on a regional basis, on a national basis, and also the strong historical relationships via the Society of Welsh Treasurers and the subcommittee of treasurers who had pension fund responsibilities. So that all led to the formation of and contributed to the success of the pooling of the Welsh funds. These other pooling arrangements, some of them are quite artificial in nature. I mean, lots of them are geographically originated and make some sense, but some of the pools are you know, it's illogical really why they form the way they are. However, there was a degree of national pride, you know, a degree of historically having good relationships and embedded working ties that led to the success that we've enjoyed. And to that point, Councillor Downing, I mean, I referenced the performance of the Swansea Fund in investment return terms, but I can happily share that the Wales pool, in relation to the other pools, it sits on the top of that league table as return for the last 3 years as well. So, and to your point about management costs, because we've kept it simple, because we don't, you know, sit in nice shiny offices, we don't have a 6-figure salaried CIO, a 6-figure salaried chief risk officer, etc., etc. Some of these pools have staff of hundreds at the moment, full of investment professionals. We determined to keep it simple. The investment management costs reflect that, and it would be interesting one day if Westminster DLUC, as they now are, you know, had some analysis of pooled costs and has some comparison of that, because yeah, to your point, Councillor Downing, it would be interesting to know that you know, our costs have decreased and you know, we are more efficient as a result of pooling.
Any more questions? Excellent questions, may I say, and a very concise explanation from our Deputy 151 officer. You can see the recommendation. Can I call for a vote on that particular item, please? All in favour? That's unanimous, Chair. Thank you. Okay, we're on to item 7, B, breaches report, sorry, my glasses. This report is for information only, so can I pass over to our 151 officer?
Thank you, Chairman. I know we've got two new members a committee today. However, the rest of the committee are well used to receiving this report. It's a periodic, regular report that you receive on a quarterly basis, whereby we report to you breaches, and please don't be alarmed when you hear the term breach. You know, you may be concerned. However, we're legally required to report where we do not meet our own imposed performance standards that we set in respect of dealing with our employers and dealing with our members, etc. So on page 294 and 295 of your pack, you can see the latest breaches. They're included on a 12-month cycle, just so you can see any trends or maybe voice any concerns that you may have in respect of those trends informed by those figures. But you can see there on page 294 and 295 the latest breaches that we're having to report to you at this time. Sorry, on page 293 and 294 are the latest breaches that we have to report to you, and they're the well-worn breaches that you're used to receiving in respect of admin dealings and contributions being received late. As an addendum, because questions are always asked in respect of the financial breaches, i.e. the late contributions, and so Karen has quite helpfully included a little addendum table at the bottom of there to give a bit more detail of those late contributions. And as you can see, we're talking about very trivial amounts, and these sums are not at risk. They're just not received within the statutory required 19 days of month end. So it's not as if, you know, those contributions are lost forever. It's just that because of admin oversight, maybe someone's gone on holiday or someone's on sick, they happen to have missed the deadline to pay us those contributions. But because they've missed that deadline, we're required by law to report it to those charged with governance, which is yourselves, to provide you with that full transparency of what's occurring. Happy to take questions, Chairman.
Any questions?
It's just a comment, Chair, on these. It's nice to see that all our letters and emails are going to the right people, as we haven't had any breaches of GDPR.
Excellent, thank you, Phil. Right, now on to item 7C, which is trustee training. Over to you, Jeff.
Thank you, Chairman. Those eagle-eyed amongst you may have noticed that why are we receiving this report again, because we only received this last reporting cycle. It's in recognition of the fact that we do have a new intake of pension fund committee members. Two esteemed colleagues who are present today, and also a potential new co-opted member from Neath Port Talbot in due course. So just wanted to bring the report to committee for approval again, and recognise the importance of trustee training and the legal requirement that this committee has the appropriate skills and knowledge to undertake the decisions that is required of them. Happy to take questions, Chairman, and there's a formal recommendation on page 296 for your consideration.
Yes, Phil.
If we can, on the training, is it possible now to organise the training here for all members? You know, it's easier to bring one person here or two, but then all of us go up to Cardiff or somewhere for the training.
Where possible, Councillor Downing, that will be what we're trying to do. My colleague Karen is in discussion with one of the training providers to agree a suitable date in due course. But with the advent of the summer break, we thought we might be opportune to wait until the autumn, because obviously we're running into the summer holiday season. But as a starting point, we were hoping to have new elected member stroke refresher training for current members of the Pension Fund Committee early after we come back from the summer break, and then on an ongoing basis we'll take on board that comment, Councillor Downing. However, some of these courses run by, for example, SIPFA and the Pension Regulator and the LGA. One of their attractions for committee members is for you to go and network with other pension fund committee members and learn from their experiences, and for you to network and share your experience with them. So that is also one of the added benefits of attending shared training sessions and conferences of that like. But I fully take on board that for logistical reasons, if it's all possible, training is delivered in-house.
Okay, any more questions?
Recommendation is to accept this and take a vote from the members.
Sorry, the recommendation is to accept this trustee training. can we take a vote on whether we should accept this or not? Okay, thank you, members.
That's unanimous, Chair. Thank you.
Thank you. We now go on to item 8, which is exclusion of the public. This is on the grounds that there could be a likely disclosure of sensitive information. So I would like to, at this point, exclude the public.
Move, Chair.
Thank you. Seconded.
Seconded, Chair.
Thank you.